This was during the earnings call. There's a lot of discussion going on with Disney and ESPN. And, you know, what Michael Nathanson of MoffettNathanson, big investment firm, talked about. He got on the phone call. He got on the earnings call this Wednesday and suggested to Bob Iger live on air that he should split Disney up into two companies. And Iger was flustered and was like, dude, what? Like, well, I'd love to see what that looks like. Well, guess what Michael Nathanson did? He put out a memo to everybody out there on Wall Street exactly what he was talking about. So this is Michael Nathanson's perspective here. I'm going to skip past the rigmarole.
Did he separate parks from studios or keep those in the same entity?
No, he split them up. So
okay, that's what
This is what he's going on. He's like, so what Michael Nathanson said, and I'm sorry, Jonas, I know you were hoping this was your boyfriend Ben Swinburne. We'll get to him. Jonas loves some Ben Swinburne. I do too. I'm messing with Jonas, but this is what Nathanson said. I'm not going to comment. Well, no, he was going that way. Let me find the right paragraph here. I apologize. I thought I had it queued up. Here we go. Well, Bob Iger, guess what? Nathanson emailed us and his clients that thesis this week. We think there's a clear case to be made that under any scenario, Disney assets are worth, and he's right. He's 100% right on this. Disney's assets are worth materially more than what their market cap is on the S&P.
Market cap is 160 billion.
Exactly. So if you look here, what he says is, scroll down because I enhanced it here.
Am I understanding this correctly? Are you saying that they're worth more broken up?
Yes.
Yeah. Okay.
Yes.
So individually as component. Okay.
And Michael Nathanson, I think I concur with his analysis. I truly do. I think he's 100% right. We think there's a clear case to be made that under any scenario, Disney assets are worth materially more than its current enterprise value. And that's just another way of saying like the book value plus, or you look at like the market cap, which as Jonas stated was about 160 to 170 billion, depending on the trading day. Nathanson wrote, the current enterprise value is about 213 billion, and 3/4 of that is parks, experiences, and consumer products. Again, 3/4 of his estimate is parks, experiences, and consumer products. That's as much as the entire market cap that Wall Street thinks Disney is worth now. That is completely throwing out linear broadcast, ESPN, all the frickin' movie studios, everything, film and TV production, parks, experiences, and merch. Yeah. So hotels, parks, and merch is worth 3/4 of his perceived enterprise value of Disney. And he's like, Bob, split this shit. That's his thing. Welcome to the newest trend in Hollywood, unlocking value. And this is true, and this is why I thought the article was brilliant. They dove into the recent Lionsgate issue. Lionsgate is splitting up. Starz has for years owned Lionsgate. By the way, what have we been talking about? Lionsgate recently re-upped their credit line with JP Morgan Chase, going from $500 million to $1 billion.
I think you might be thinking of Skydance, or did Lionsgate do it too?
I keep saying that. I'm sorry. That's been buried in my head. But Lionsgate did also recently up their stuff. Skydance did it. Lionsgate has done it. This is the thing that's going. They're splitting from Starz. Starz has owned them. And Lionsgate's like, we realize that if we actually break off and are a separate publicly traded or privately consumed entity, we can do better.
But here's a question. So let's say you split them apart, right?
Yeah.
How are you going to break that bridge, that connective tissue between Disney 1 and Disney 2? They're both going to be a Disney property, just separate. Because if the films, I think the parks and everything else, one of the reasons that they're suffering, one of them outside of the economy and everything and all of the identity politics and the cultural issues that they have, is they're destroying their brand. So as they continue as this public entity with their films and their actors doing it, that's going to poison everything else, don't you think?
To an extent.
Even if they're separate?
Well, yes, to an extent, George, you could be theoretically correct, but you got to remember these guys out there like MoffettNathanson, or if it's a Blackstone, not Black Rock, folks, Blackstone.
Right.
Blackstone, for those of you who don't know the reference to that, that's a private equity firm that has the controlling stake that owns and runs Candle Media, which is where Tom Staggs and Kevin Mayer are now, the two former Disney executives that were basically shown the door. They were Bob Iger's successors at one point in the last 7 years. And they've been hired back by the Walt Disney Company to consult with Bob Iger about all this stuff.
Right.
So my point is that these kind of private equity firms, this is the kind of stuff they get involved in. The thing, George, is that if they were to split it up, and this is the difference, they're not looking at it from a cultural, we screwed up. Like, we just hired a dude on TikTok that wears Minnie Mouse dresses. No, they're looking at it from a standpoint of enterprise value, as Michael Nathanson says. And the point of that is that the stock price, the market cap, is undervalued compared to what they think Disney's actually worth because of the drag, the financial drag on Disney with their crap.
Right, but yeah, I agree with you, but that's what I was saying. If Disney Studios, let's say they're separate, if they continue that crap, won't it still be a drag, even if it's a separate company? Because they're still the same brand.
Let's talk about their movie assets here for a second. Their movie and television assets, which they have 20th Century Television now, which they have barely done anything with. So they have all of this stuff that's not Disney branded. I'm assuming that is the easiest clear-cut thing to separate out. But what do they do with all of this stuff that we've been talking about that has that specific Disney name attached to it? These pillar brands, Marvel, Lucasfilm, obviously with Star Wars, Pixar. Those are the ones that are a huge drag on the company. But at the same time, the entire point of those segments is to generate content and IP to be used by the parks. They never made a lot of money in that. Back when I was doing my analysis of the healthy Disney company, if the company could be divided into 5 parts, 2 of them would be parks, two of them would be media networks, and only one of them would be the movie side, which would if they made $5 billion, which it wasn't $5 billion, the movie side would only be there's just little 1 billion there. All of that is just pushed over as something to create new product and new parks experiences in order to refresh the theme parks. Now, that being said, the theme parks obviously pushed the other direction a little bit with pushing things and keeping things relevant, like a Snow White roller coaster, keeping this 1937 movie, which is a great movie.
I agree.
Refreshed in people's minds. So are they saying have some kind of IP deal here, or because the Disney production side has very little value outside of the Disney brand?
That's why they want to separate it, because they know. Here's the thing, George. The bottom line for stuff like this, and the whole reason for Nathanson's posit is that if they were to do this, then the stockholder value would overnight appreciate. Because what happens is that you split the entities. You basically do. Think about what AT&T did with Warner Brothers in similar fashion.
Okay.
You kind of have a reverse Morris Trust spinoff situation to where Disney would shoot out the studio film production from everything else. Like, you'd have one company that was a pure play entertainment theme park.
Right. No, I got that part. So it seems like it would be short term. It would be very valuable. It would be very good for the shareholders. And
it would be because the point is that the theme park, the resorts, the hotels, and the merchandising is being destroyed right now. The value of that shareholder value is being crushed right now because of the other dragging trash.
I agree with you.
You spin the trash off, and all of a sudden this might go from, like, the parks. What they're basically saying, what Nathanson is saying here, is that the parks, resorts, and the merchandising are worth $160 billion of market cap alone, without the other stuff. Spin the other stuff out. And then you, as a shareholder of Disney, would own the majority stake in the spinoff.
Now, if you could separate that out and then at the same time make sure that no one from the entertainment side is running the other side. Because because look at the fact that we had
I agree.
The Star Cruiser Hotel. Would you ever in your life think that a Star Wars park would close an aspect of itself?
Okay, I'll do you one better, George. Put you on the spot.
What you got?
How many Disney hotels have ever closed in the history of Disney World that were not basically aged out after 30 or 40 years of service?
One.
Star Cruiser?
Galactic Star Cruiser.
Yeah, that's it.
I mean, it's like Star Wars, the biggest brand in history. I mean,
that's how big of a shit show and a donkey pile. Pardon my French, Chad. I'm at that point. That's how big of a crap show that is.
Here's the thing.
Because that was a
hate
trick
to
question.
say I have to run because
Go ahead.
I'm turning into a pumpkin at 9 p.m. here.
Jonas.
So, if the simple statement here is if they can make it to where the movie business has to make money, it will fix all of their problems. If they are saying we have to make something entertaining and not just, cashing in on whatever IP they want to generate here, if they're actually making things that people want to watch, this will fix all of the problems. The movie business being broken is the symptom of the rest of the park, because the parks are only exciting and only refreshed when the TV and movie side is functioning properly. So
that's it.
I don't think they can actually spin it off and leave any value on that movie side because they don't have anything there.
Yeah, that's what I was trying to say. It's like you can split it off, but they're still being poisoned by the brand of Disney itself.
No, you're totally right, George. I'm just I guess, and I should do a better job of trying to explain it. The point is that what these guys are doing, they don't understand that.
Okay.
They don't get that. What they see is that like let's carve out the canal water from the Ponce de Leon Fountain of Youth.
I see.
They don't understand the fact, or at least they haven't quite caught up to the fact, as Jonas and you have correctly pointed out, and so many others, that the feeder band for the parks and the longevity of their commercial viability is the frickin' IP. It's the Disney Plus. It's the film production. It's like you cannot keep having dud after dud after dud, especially when they keep wrecking them. Like they literally take powerful commercial IP, almost what I would call evergreen IP, Snow White, and Peter Pan, and then just crap on it.
Right.
And like literally try to change the characters in the parks to match the new reimagined version of it, and it goes nowhere. And it's like, and even our friends out there that work in the merchandising industry that have communicated with us saying that things are definitely changing going forward with some of these deals, in terms of
I agree with you.
They're not going to keep eating the losses that Disney puts on their shoulders. I'll leave it there.
Just look at the park. What did they do? What was it 6 weeks ago where that video came out of the guy dressed, the host at the park who was taking it in the little boat?
I showed in my video this morning. Right. We showed that, and it's been a little bit, but I mean that's what we were talking about earlier in the show. That's the whole point.
The entertainment side has poisoned the parks, which was a money stream for them.